Before we jump into QuickBooks, I'd like to take just a few seconds to review the sales process, what happens when we invoice, and what happens if we end up not needing to use a transaction. The sales process might start with a quote. Now, you don't have to use a quote, but if a customer comes and says, I just need to know what you can provide for me, this is our commitment to provide goods and services at a particular price. They then could use that, for example, to comparison shop and figure out which vendor they actually wanted to use. Quotes do not affect the general ledger because we're not actually doing any transactions. We're just kind of putting it in as a placeholder and an example of what we can provide. The next step would be to have a sales order. Now, you could start right at the sales order, or you could convert a quote to a sales order. A sales order is when there's going to be a lapse between the commitment to buy by the customer and your delivery of it. It's useful for tracking back orders, and as I said, you also can make a conversion directly from a quote so you don't have to do a lot of typing. An example of a sales order would be if somebody said, yes, Aaron, we want to buy 50 copies of your Peachtree training, but we don't want to buy it until the end of next quarter. I can go ahead and put it on a sales order so I know it's going to happen, but it actually hasn't been transacted yet. When it is transacted, that's when we actually create an invoice. Now, this can be standalone or it can be applied against a sales order. You can only have one sales order per invoice, but you can have many invoices applied against a single sales order. Invoicing is the part that people don't skip. So even if your business doesn't do quotes and doesn't use sales orders, you probably use invoicing. The last step is also optional, and that is to provide statements. Statements simply summarize activities for a given time period. It also can be used to calculate finance charges if people are carrying a balance. And some people choose to provide statements instead of sending invoices. So if I have a customer who's making multiple purchases, multiple transactions throughout the month, they may say, I don't want to see an invoice for each one of those. Just send me a statement at the end of the month and I'll pay the statement when it's due. So we can see that these are 4 different steps. We can use them in a variety of configurations and there really aren't any requirements, just what makes the most sense for your business and your tracking purposes. So since we're all going to use invoices, what exactly happens when we use an invoice? Well, first of all, your account receivable increases by the amount of the invoice, as long as the invoice wasn't paid immediately. The invoice is going to show in all of your sales reports, as we would assume it would. If you have any items, they're going to be tracked in inventory reports. And the products that are purchased, the quantities are going to be removed from inventory and all of those related accounts updated. And we know very well by now that when we start working with just the removal of one item from inventory, that really can cause multiple things to happen. If we have the income, whether it's paid immediately or not, it's going to be shown in the P&L. So whether it's going to cash or the accounts receivable, the P&L is going to show the sale. What happens, though, if we end up not having a transaction? Well, hopefully that doesn't happen very often. And there are a couple of different ways you can handle it. The general rule is to never delete anything. That's kind of a database rule as well as an accounting rule. People don't like to see holes. For example, if we go from invoice 101 to 103, somebody wants to know what happened to 102. There could be a very good answer for it, but there could also be some more devious answers. So it's better to void things instead of deleting them, and that's actually true for almost everything that you work with in accounting and in Peachtree. So what happens when we void an invoice? Well, it actually creates a second invoice with the same number created with a V, so we have V for voided. The second invoice is the negative amount of the original. If you had inventory involved, the inventory is restored, including all of the related entries. And if it was against a sales order, that order is reopened. This ultimately creates a $0 receipt to clear both the invoices without affecting the account balances. So what you think is basically simple, in some ways is, but when all the accounting becomes involved, we can see that this could affect many accounts. Fortunately for us, it's just going to be a couple of clicks. We're going to use our few clicks to work all the way through the sales process, and I can already feel the energy in the air because the time has come to actually sell something. So here's what we know. We have a local company who's decided to provide incentives to their staff, and they're gathering quotes for a facial as one of their options. If selected, they will need 10 deluxe facial packages, and we're going to provide them with a quote. So from my center, I can simply start through the flowchart with quotes. We'll give that a click, and of course we're going to create a new quote. The customer ID is going to be related to Beecham Real Estate, and we haven't worked with them before, so I'm going to go ahead and create the new ID, and we know that we'll have to go ahead and save them as a customer. We'll go ahead and type in the full name. And we'll skip over all of the address information, move over to the date. Now currently this is dated in August 28th, but because we want to work through the sales process, I'm going to cheat a little bit here just for our illustration, and I'm going to backdate this. Let's say that they actually made the request on April 8th. Then it should be good through a certain amount of time. Now this depends on your particular policies. We can see that the default is that it's good for 30 days. We also can put in a quote number, or we can keep that for when it's printed. I'll go ahead and type in a quote number of 101. We're not going to make any drop shipments. We're not going to work with any terms right now. All we need to do is fill out what is being quoted. We know that we're going to need a quantity of 10 and that they're talking about our deluxe facial package. So we'll type in the 10 and we'll select the package. The description, of course, is already there. The GL account is there. The unit price is there. All we have to do is keep on tabbing. Now I'm not going to apply this to a specific job because I haven't defined it as a job, but I do want to do something else. Because they're going to be buying several of these, I want to kind of up the ante, if you will, and I'm going to give them a little bit of a discount. I'm going to continue to press tab to move to the next line. I'll enter a quantity of 1, but I don't have an item to sell, so I'll tab right over that, and I'll just type in a description. Now, I'm not sure discount for bulk purchase is the best way you could put it. You could probably come up with something better like new customer incentive or something like that, but we get the idea. I'll press tab again, and now I need to come up with which account this is supposed to come out of. Now, we haven't worked with discounts before, so I'm going to kind of look through my list until I find the one that's appropriate. We know that this isn't going to be a hair services sales or income account, although we could technically reverse it out of the same account that we were charging it to. Most charts of accounts, though, have a specific income account simply set for fee discounts. We'll go ahead and choose that one. Then we need to give the price. I need to do a little bit of math here. The unit price is $105 and the total amount is $1,050. So let's say I wanted to give them a 10% discount. Since it's a discount, I want to put in a negative sign or a dash and then the actual amount. Now you can see that what we're really doing here, since they bought 10 and we're giving a 10% discount, is giving them one of them free. This shows up as a negative amount and it is affected in our balance. The quote total now is $945. Because this is a new potential client and I haven't worked with them before and I need to really log what I'm doing, I'm going to move up to the top toolbar and take advantage of some of Peachtree's features. You'll notice that we have things like notes and journals and events. And you can kind of pause over to see what it is. A note is just a simple note to go along with this quote. The journal is going to be the accounting behind the scenes. So if I want to see what all of this stuff is doing in more detail than what I have on the bottom, I can look at that. An event, on the other hand, is something that's associated with this transaction. Let's go ahead and give that a click. We can see that it's a customer or a prospect. We can choose the ID, and then we can put in a particular date. Because we haven't saved the customer yet, then this isn't really available. So we know that we have to take just a second, get out of here, and come back after we've at least initially saved our transaction. Let's go ahead and do the save. That's when we can go ahead and set them up, as well as being noted that this is not in the current period. If you recall, we've currently backdated this, and it's just giving us a little note that says, well, now wait a second, you're supposed to be working in a different quarter and you're trying to backdate it. Is that okay? Yes, it is. Now we'll go ahead and do a fast add, and our customer information is saved. It's one fewer step than we normally have to do because we don't have to go through the window like we did with so many other of our activities. Well, what actually happened to our quote then? Remember your previous and next buttons on the right-hand side. I'll go ahead and click the previous button. Now we can see our quote, and at this point I can also click Event. Now we can see that it's already filled out and we have additional options. Now I'm not going to go to August 28th. It's trying to go back to the default. I'm going to put it on April 8th. And I might say that I had a call from the company. And then I can simply put in my note. So there's a little bit of typing. They asked for a proposal for employee incentive program. We gave them a 10% discount as new client incentive, and if they like it, they will probably purchase this twice a year. That way we can keep track of what it is we got and what it is we're creating and why. A little bit of documentation never hurt. We haven't talked about action items, but at the bottom we could actually display in the action items. And I'm going to go ahead and do that. I'm going to say that I want to see an action item 30 days after this phone call. That's going to give me a reminder to call them and follow up on the quote if I don't hear from them before that time. Let me go ahead and save this and close it. And this is a great way to track, especially when you're working with many steps through the process. Now we'll go ahead and save this one more time. Say yes about the current period, and then close it out.